cloud service provider market is expected to more than double revenues by 2021, when it will reach $80 billion in revenues. Sami Badri, Senior Equity Analyst at Credit Suisse, is one of the leading names observing the industry, and he joins me here today to paint a clear picture of what's happening in the market. Sami, thanks a lot for coming along. When it comes to clouds and data centers, we've seen a lot of shifts this year. So the REITs have a really good start in the beginning of the year. M&As are still going strong, companies are expanding and into new markets as well, especially Europe and Asia. Would you mind to just paint a picture for what's happening in the data center and cloud space today?
Sure. So if you look at the $80 billion market, about 2/3 of that is going to be infrastructure as a service, more on the software side, platform as a service, software as a service, and some other moving pieces like cloud as a service as a general category. Within that, the multi-tenant data center market is going to be about 1/3 of those revenues. As we look at where we are today, and over the next 3 years, you're going to see a large amount of industry consolidation, more strategic partnerships form with more software-defined networking offerings, and more importantly, enterprises finally moving the majority of their workloads from in-house architectures into finally cloud-grade architectures. So I would say we are still in the early innings of a very significant shift, and that is very prevalent that whenever we learn about the issues that enterprises are actually going through, we further extend our knowledge into specifically all the bottlenecks and all the resistance occurring in the sector. Eventually, I really do believe that the majority of enterprises will migrate to cloud architectures, which will take time. But once again, we are in early innings.
Would you have an idea of the percentage that will go and one that won't go?
So as a total percentage going into either a public cloud or a private cloud architecture, that's going to be about 90% of all workloads. Today, as we look at enterprises, it's probably more around between 35 and 50% of all workloads remain in the traditional IT, more old architecture framework. Okay. But over time, I think you're going to see about 90% move to a private or public cloud architecture, and then within that 90% bucket by 2021, you're probably going to see even another 90% of that be public cloud. Okay. Now, even though 90% to companies like Amazon, Microsoft, or even Google seems like a lot, I would say that the data growth itself is actually very significant. So there will be more than enough business to go around, specifically in the multi-tenant data center side and in the cloud service provider side.
Okay. And do you see any differences between regions as well? Because North America is very active, Europe is very active, Asia is booming, but then you still have South America and Africa that's not very active. Is there any difference between regions? Do you have any comments on the region side?
Yeah, so for regions, you definitely see the developed markets really developing and stepping up their game. I think that's a huge function of the corporations located in those regions, but you are starting to see countries like India, China, and Northern Africa finally start to pick up. I would say like M&A is a huge factor. You had Equinix that is very active, acquiring subsea cable landing point facilities in Europe, and then the huge play there is to make sure that Africa is connected. Probably in the next couple of years, the developing markets will be a very big piece of the pie, but today developed markets really is where the majority of the action is. It's just a matter of time before developing markets catch up.
Okay. Then on the private equity side, what are investors looking for in the data center space today?
I would say it's a combination of very predictable returns at the right time horizons. So every private equity firm is trying to deploy capital in a way where they can definitely lock in a certain IRR, or internal rate of return. I think the deals that are going through the market today are actually a little bit lower IRR than they've historically been. That's just a function of the large competition. But I do think private equity is still chasing after specifically data center deals. Okay.
And how do you see the market changing? Because at the moment you've got 2-3 big players, so Economy, Digital Realty, CyrusOne. It's always more or less the same names, but we've got big guys coming out of Asia, especially China with Baidu, Tencent, all those guys. How do you see this changing? Are we going to be a 3-5 guy sort of industry? Are we going to have a lot of different names out there? How is it going to look like?
So out of the US, I think Equinix and Digital Realty will most likely get bigger. You do have some mid-cap players like CyrusOne also taking the next leap in their entire corporate strategy by advancing from the US and into Europe with their acquisition of Xenium. As far as China, I think the big vendor I think that stands out is probably GDS, which is backed by a function of multiple Chinese hyperscalers and enterprise data centers. And I think over time you will see other big players emerge, but I think probably for the next 2 years, Equinix and Digital Realty will dominate the narrative. It's just a matter of time before the third biggest player is formed. And I think that's actually, I think that is actually a very imminent development.
Okay, and who could that be?
At the moment, it's very unclear, but I think one big thing is when a mid-cap player like specifically CyrusOne decides to cross regions and enter the European market with the Xenium acquisition, I think they're starting to show signs of becoming a very major player, especially internationally. Another factor is that CyrusOne actually has a strategic partnership and an investment with GDS, exactly. And I think that is going to be a huge proponent or a huge factor in them being a very big dominant player one day.
Okay, and then a bit out of tune with that one. When it comes to edge computing, how is edge computing going to influence investment in the data center space?
So I think with edge specifically, or edge computing, I think defining what exactly the edge is the big barrier. Once that's actually defined, and many people have different definitions, it's either a latency definition or it's an application definition. I think the edge computing debate really comes down to application, and specifically software engagement to the node or to the end users. Over time, I think that the players with interconnection businesses will benefit from this dynamic initially, but then over time there will be other emerging players like edge data centers specifically, or an example or the technical term would be micro data centers at close to the edge, close to macro cell towers or small cells or even fiber nodes that don't even have a co-location footprint. So that's the way I would look through edge computing.
Okay, then one final question. We are at Data Cloud 2018. In 12 months, Data Cloud 2019, what's the question that you have right now they want to see answered in the next 12 months?
Sure, so I think to this day, we're still debating how long it's taking enterprises to adopt multi-tenant data center, public or private cloud architectures. The reality is they need to make this transition. It makes sense from a cost perspective, it makes sense from a latency and performance perspective. I think what really needs to occur is everybody needs to get on board and start deploying capital very quickly from the IT spend perspective. I think it's a matter of time before that happens, and by 2019, I expect there to be significant developments in the software-defined networking landscape and specifically the public cloud landscape. So I think public clouds will come out with multiple new features and offerings to make enterprises adopt public clouds much easier. And I think software-defined networking providers are going to be a huge function of that. And I think as you look at the multi-tenant data centers, they're going to benefit on both sides of this. On the software-defined side, you're going to see players like Equinix and Digital Realty benefit. On specifically the public cloud side, you will continue to see Google Cloud, Amazon Web Services, and Azure benefit. But hopefully by 2019, we actually see material developments as far as connectivity, which I think to this day is a huge problem in the sector.
Okay, Sami, thanks a lot for talking to me. Don't forget you can follow Data Economy on Facebook, Twitter, and LinkedIn, and also visit the website on www.data-economy.com.